Hi there, welcome to a Kneppy Invest and welcome to the stock of the day. Bit of a contest today between two companies, Domino's Pizza, but I ultimately chose Nick Scali as a stock of the day for a few reasons. First of all, they did release the half-year results, and the results were actually quite good. Now, you might be surprised I'm saying that if you have a look at what happened to their profit compared to the previous corresponding period. And the second reason I've chosen Nick Scali is simply because, well, the market has reacted quite well. And the second reason is because this is a perfect example that if you just look at the underlying numbers and without any more information, you might think the share price of this company should be dropping 16%, not rising 16%. But the most important thing when a company releases results is not the numbers. It's how the numbers compare to previous guidance or expectations from the market. That's the most important thing. The other important thing when a company releases half-year results is any sort of trading update the company might release. So we're going to delve into Nick Scali results and try to understand why the share price is up 16% when the profit of this company dropped, I think it was 22% or something like that. Okay, so and then at the end of the video, we'll have a look at the chart, and the chart actually does look quite good. So what I'm going to do now is just go to their Appendix 4D and have a look at Section 2 here. We'll ignore the first bit of Section 2, which is statutory results, because I like to focus on underlying results because that eliminates any one-offs. For instance, acquisition costs of Anglia Home Furnishings, 1.337 million. And when you do eliminate these one-offs, profit down 22.6%. So if you just had a look at that table without any more information, without knowledge of what the previous guidance was, you might think these results were absolutely terrible and the share price would plummet. The other thing is revenue up 10.8%, but don't forget, this company made an acquisition and they're now selling products in UK, and that has now been included to their revenue. So they do break down their revenue now into Australia, New Zealand, and UK, and that's also important. So what I'm going to do now is go back to their AGM on the 21st of October, because at their AGM on the 21st of October, they did provide some guidance for the first half. And what I'm going to do is compare that guidance to this little table, particularly the first table here, the underlying results, and focusing on Australia-New Zealand group revenue and underlying Australia-New Zealand group net profit after tax. So this is the most important thing. Okay, so let's go to their AGM back in October. I think it was the 21st of October. The first thing I want to do here is have a look at the section. This is found on page 4. Have a look at the first paragraph. We currently expect delivered sales revenue for the first half in Australia, New Zealand, some weird grammar there, to be between 217 and 222 million. So it is guidance. Now, when the company releases their results, if they haven't released any sort of update, what the market is going to do is compare the revenue in Australia and New Zealand to those two numbers. If the revenue is below 217 million, the share price will be sold off. And if the revenue is above 222 million, there's a good chance the share price might rally. So let's go back to that table found in the mid-release. And Australia and New Zealand group revenue came in at 222.5 million. By the way, down 1.8% from the previous corresponding period. So if you just had a look at that, you might think, oh, pretty bad results. But $222.5 million revenue, and that beats the range they expected, which was 217 to 222. So you might be saying, well, that's a small beat, but it's a beat. The company did it better than expected when it comes to Australia and New Zealand revenue. The next most important thing is found on paragraph 3 here. Following the significant increase in freight and subject to any unforeseen shipping delays, we currently expect our profit after tax for Australia and New Zealand in the first half to be in the range of 30 to 33 million. So 30 to 33 million. So let's go back to this media table. And their underlying Australia-New Zealand net profit after tax came in at $36 million, down 16.3% from the previous corresponding period, but about 10% greater, if not more than 10%, between 10 and 20% greater than their expectations. And that is the simple reason why the share price of this company has rallied 16% on these results. So even though everything is down, seems like everything is down, these results beat expectations. And that's the most important thing. And I'll be honest with you, I did not even have a look at any sort of trading update. I probably should have, but I just knew straight away the share price was going to be up. And so let's have a look at how the market has reacted, and let's have a look at the chart. Now, I'm sorry, Domino's Pizza, but I'm going to go away from you. There we go. We get rid of the screener, and we'll go to Nick Scali, NCK. Full disclosure purposes, I'm a shareholder of Nick Scali. I've been a shareholder for quite a few years now. I would consider this company to be high quality. And one of the reasons I consider this company to be high quality is if we have a look at the revenue and gross margin history over the past 10 years, we see growth for both. That's exactly what I want to see. Growing revenue, consistently growing revenue, and gross margins have increased from 61% in 2015 up to 66% in 2024. That's exactly what I want to see. Beautiful numbers over the past 10 years. And there's no reason why they can't continue this over the next 10 years. Now, I will become a little bit more wary about gross margin increases from here on in, but they could do it. Anyway, let's have a look at the chart for Nick Scali. And this is a brilliant looking chart. You could call this a breakout. Now, because I do own shares in this company, the question becomes, will I take a trading position on this particular breakout? I'm not sure. I am not sure at all. Now, this is the daily chart. Share price could be at an all-time high. Yep, share price is at an all-time high as we look at the weekly chart. And I'll be honest with you, this is the chart of a high-quality company. In fact, if we zoom out even further, we'll put in the 200-week moving average. This is the chart of a high-quality company. Share price from the bottom left to the top right. Anytime the share price falls below the 200-week moving average is a good time to think about buying some shares in this company. It doesn't happen all that often, but it does happen. It does happen. It's happened about 4 times in the past 5 years. Okay, so share price at an all-time high, share price up 16%, a breakout. And in fact, this does fit my criteria for a breakout. I should just mention that fairly quickly. So what I look for is, in fact, I'm just going to confirm. Oh, it almost makes my criteria for a breakout. So what I'm looking for is positive financial results. Tick. What I'm looking for is share price at least a 3-month high, preferably over 6-month high. Tick. The other thing I look for is high volume. In fact, we don't see high volume yet today. That could change, but the volume isn't outstanding. So that's probably the one non-tick, I wouldn't say red flag, but the one thing I am looking for that I don't quite see in the chart for Nick Scali. Okay, so that's all I have for this particular video. The other thing I should mention is I did see a bit of a news blur in regards to their net profit, and their profit exceeded city estimates by 40%. Yes, exceeded city estimates by 40%. There you go. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.